Hello, everybody. Can we hear me okay? All right, excellent. So good to see all of you. Thank you for joining. We'll give it about 1 minute and then we'll get started. All right, that was our 1 minute. Let's dive in. Um, all right. Hi, everybody. I'm Rob Patchen. I'm Keeper's senior ops manager, and I hope you can see my bright and shining face on that slide there. Um, I'm joined by Shonak, who's our head of operations, and we've managed Keeper's tax filing side of the business for the last several years, and have seen a million billion returns. And so we wanted to start this webinar series for tips and tricks for people who've seen a ton of tax returns, including me, that can provide some guidance on how to save more money on your taxes and overall just make filing less stressful. Let's talk shop. W-2 and 1099 work. So first, the basics, and maybe this is a refresher for a lot of you, but we'll dive in deeper as we go along. So for 1099 and W-2, those are just two different kinds of tax forms, and each form tells you what kind of work you did. So if you were an employee, and by employee, what I mean is you had a manager and you had a schedule, maybe you had benefits, stuff like that. Then at the end of the year, you're going to get a W-2. And I'm sure a lot of you have before. Now, you should have already received this form if you're an employee of a company last year, because the due date was the end of January. So if you haven't gotten this form yet and you feel like you should have, you're going to have to go hassle your employer for that. Now, on that form, on your W-2, your company tells you how much you made and how much was kept and set aside out of every paycheck to pay for your taxes. Those are called your withholdings. Now, the IRS also has a copy of your W-2 or W-2s if you have more than one employee job. So when you do your taxes and you just have that kind of W-2 income, you're essentially just confirming what the IRS already knows when you file your tax return. And once they go in and they take their share, they'll send the remainder back to you, and that's your tax refund. Great. So if you are a W-2 only taxpayer, if you've only got that kind of employee income, then I can't say filing is going to be a fun experience, but it should be a pretty straightforward one. And at the end of filing, you can probably expect a refund. Now, for you folks that are 1099, it is slightly more complicated, but it doesn't have to be any more stressful. And in a lot of cases, it does represent an opportunity to deduct some of your expenses. So a 1099 is a different tax form that tells the IRS that you had self-employed income or freelance income, contractor income, a lot of different terms. There's 1099 NECs, 1099 MISCs, 1099Ks. More on those in just a bit. But these are all basically just forms that say that you had something other than the typical employer-employee relationship. And in the eyes of the IRS, that makes you a kind of business owner. And maybe you think of yourself that way already, and I hope you do. But depending on your work, maybe you don't feel that way. But you are responsible for a separate set of taxes that you have to pay, and you can save money by remembering to deduct your expenses through Keeper. And you want to be keeping good documentation like any business owner would. So I would encourage you to get into that mindset that you are, in fact, a business owner. So on those additional taxes, Medicare and Social Security, are additional taxes that you're going to be responsible for if you're a 1099 contractor. There are also no withholdings when you're making 1099 income. So you may be responsible for quarterly taxes as well, and we'll chat about that in just a bit. But the big and exciting thing that's different when it comes to filing 1099 income is in the deductions. So this is the fun part. What are tax deductions? Tax deductions or tax write-offs are money that you essentially subtract from your gross income when you're filing your taxes. And that's a good thing, because it means you're going to pay less in taxes. If you made $20,000, for example, with your 1099 work, but it cost you $5,000 to make that $20,000, then you should really only be taxed as though you made $15,000. You still have to report that you made 20,000, but if you also remember your deductions, you will end up paying less in taxes. So there's personal deductions, which is stuff like medical expenses or home mortgage interest or giving to charity. You know, those commercials where they say give now and your donation is tax deductible. Yes, so all that stuff is true, and we will help you keep track of all of that stuff with Keeper as well. We'll make sure you get credit for it. But for our purposes today, we're talking about business deductions. Now, these are different from W-2 expenses, aka your employee expenses, because your stuff that you bought and used for your W-2 work should be reimbursed by your employer. And anything that was reimbursed by your employer is not going to be tax deductible. If you bought something that you think should be reimbursed by your employer, that is another one where you're going to have to hassle your employer for that. The IRS is not going to allow you to deduct that on your taxes. But for your 1099 work, there's a ton of stuff that counts. So the trick is, what counts as a deduction? Well, according to the IRS, it's anything that's both ordinary and necessary to the functioning of your work. Got that? Ordinary and necessary. So what do I mean by ordinary and necessary? Ordinary is something that is ordinary to your profession. So the pro tip here is that you're being compared to everybody else who has the same job type that you do. When you file your taxes and you have 1099 income, you fill out the type of work that you do, and the IRS knows what kind of expenses they expect to see. So if you're a rideshare driver, you drive for Uber or Lyft, then they're going to expect to see gas and car maintenance and stuff like that on your return. But if you're one of the only taxpayers, one of the only Uber drivers who's reporting, $20,000 of meal expenses as an Uber driver, that's going to raise some eyebrows. So that's what I mean by ordinary. Is it in line with something that a typical person who does your job would expense? So that's ordinary. Now, when it comes to necessary, what I mean is anything that's necessary that is directly tied to your job. So we get a lot of questions that are like, oh, I finished my shift at the plant, and on the way home, I grabbed a burger because, I was hungry. Gotta eat, right? Necessary? No, it's not necessary. At least not according to the IRS. It's not necessary. And that's true of a meal that you're going to grab or clothing that you have to wear on the job. If it is a uniform, like if you're a firefighter or something like that, and you do actually have to have like a specific uniform that you have to wear, then that is going to be a tax deduction. But clothes and meals like that are only sort of tangentially related to your work, those are not going to be a tax deduction. So there's a ton of stuff that falls under ordinary and necessary, and you can see this list here. There's a lot of stuff that falls under it, stuff that you might not even think about. I would say, when in doubt, check Keeper. Go to the Ask tab in the app and ask your tax pro when something does or does not count as a deduction, and we'll help you out. But I do want to cover some of the major main tax deductions that we see all the time that you might be missing out on. First one is your computer. So your computer is a tax write-off if you're using it for work at least part of the time. And the way that this works, and the way it'll work for all of these expenses for the most part, is you get to write off the percentage of your computer that you estimate that you're using for work. So if you bought a $1,000 laptop and you use it 30% of the time for work, then $300 are deductible, right? Now, what do I mean by work? Well, it could be anything directly tied to your 1099 work. This is stuff like using Excel sheets to keep track of your inventory. If you're a graphic designer, I'm sure you're using your computer all the time. Reminder that the IRS considers you a business owner. So if you're using your laptop as a way of keeping track of your income, for example, or you're using Keeper, which is a tax write-off, or you're filing taxes, or whatever it is that you have to do in the course of maybe a calculator app, something like that, in the course of operating your business, that all counts as a tax write-off. Your phone, very much the same way. Your phone is a write-off where it's the business use percent that you can write off. So if you're using the Keeper app, we'll help you keep track of those pesky percentages when you're using the app. But otherwise, it works very similarly. If you use it half the time for work, then half of it is a write off. The one thing I'll add here is that your cell phone service also is a write off. So that recurring monthly expense, you also get to apply that business use percent, and that too is a write off. And don't neglect how often you use your phone. And I'm sure all of you use it all the time for everything, including navigating to the store to buy supplies for your work and all the rest. Um, so don't neglect it. Even if you think you don't use your phone that much for work, I'm guessing you might, is my guess. And I'll add one additional note, which is that any apps that you're buying, and this is true for your computer as well, any apps that you're buying are fully tax deductible if you're using them exclusively for work. So you don't need to apply that business use percentage. It's actually a different category when you're filing your taxes on your Schedule C, called software, and that's fully tax deductible, assuming you're using it for work. So supplies. This is a really big one, and what I mean when I say supplies is supplies that are going directly into the work that you're doing, and the stuff that's kind of on the periphery, I guess. So if you make and sell clothes on Etsy, for example, the cost of the materials is absolutely a write-off. But so is the packaging that you use to send the goods to your customers, and so is the shipping costs, and so is the tape that you use to hold it all together. So are the boxes that you store stuff in. This category is huge. So don't neglect all the things that you need to be able to do your work. If you're a medical professional, this includes stuff like medical supplies. These are massive, massive write-offs. So do keep track of all that stuff. I know we have a huge disparate group of people here with all sorts of different jobs. If you go to, if you look this link up, what expenses can I deduct on my taxes as a 1099 contractor, we have a huge list of different kinds of work. That's going to be, you'll be able to see the top 20 or 25, 30 deductions specific to your kind of work. So do check that out. Fees paid to contractors. If you contract labor yourself, you need somebody to set up your website, make your logo, and all the rest. Whatever you're paying other people for, that's also going to be a tax write-off for you. The home office deduction. This is a huge one. And if you're thinking, well, I don't have a home office. Well, you might. I know you're taking this webinar from somewhere. You're watching it somewhere. And if that place happens to be a dedicated spot where you do your work, could be something as simple as a small desk, then you have a home office and you have home office expenses. What also counts is a storage space for your supplies. So if you buy your stuff at a thrift store and bedazzle them before selling them on Etsy or Depop or eBay, that storage space is a space that's used exclusively for work, even if it's in the garage. It's a space that you have to pay for, and it does count as a home office expense. And the reason a home office expense is so valuable, as you can see on here, is that you can deduct some pretty major expenses like rent. Same thing with the computer and cell phone. You're going to be using a business use percent. So if your home office takes up 10% of your apartment, for example, that's 10% of your utilities, 10% of your rent, et cetera, that you can write off. And there's even more expenses associated with having a home office. So again, consult your tax pro and Keeper if you're unsure of what's included in all that. Car-related expenses, another major one. I'm sure most of you drive at least some of the time for your work. Could be running to the store for supplies, or to UPS to ship your products. Could be you're an Uber driver and you drive all the time for work to everywhere. But if you spend any time at all, then your car can be deducted as well. So can all of your car-related expenses like gas and car maintenance and car insurance, etc. Same as with your other expenses, it'll be just the business use percent of your car that's tax deductible. If you drive 20% of the time for work, and then 20% of your 20% of your gas is going to be tax deductible, etc. And I'll add here that tolls and parking are fully tax deductible if you're using them for work. Speeding tickets and parking tickets, lamentably, are not tax deductible. Unfortunately, definitely fails the necessary part of being an ordinary and necessary business expense. We do get a lot of questions on that. So just FYI. Meals. So Meals can be a big one if you do end up meeting over food or drinks with clients. Now, this does have to be a business meeting. You can't, like I say, get done with a shift and then go out with your work buddies for food, and then write that off. It does have to be with the intention of winning a client or maintaining a client relationship. But if that's you, um, let's say you're a real estate agent and you take your prospective home buyers out for food, when you get to know them, then that's going to be a tax deduction. Travel expenses. Business trips are a really big expense and are absolutely a tax write-off as well. I would say exercise a little bit of caution here. This is definitely one case where you're going to want to talk to your tax pro if you do travel a lot, because there are a lot of rules that go along with travel expenses. You can't go to, say, Orlando for like one day at a convention to sell your stuff and then spend the rest of the week at Disney World and like write off all your lodging and all your food and stuff like that. But if you really did need to buy a plane ticket and lodging and food in order to attend a conference or meet with a client or sell your products at a convention, something like that, then yes, indeed, all of those are deductible travel expenses as well. Now, that's a lot of stuff that I just gave you. And it's really just the tip of the iceberg. If you buy malpractice insurance and you're a medical professional, that's a tax write-off. If you're a streamer and you buy video games, those are actually a tax write-off as well. And nobody is expecting you to keep track of all this stuff that I'm giving you. When in doubt, ordinary and necessary is the thing you want to keep track of. And when you're actually if you have any further questions, I know I've said it before, but check with your tax pro in Keeper. Consult your tax pro. They'll have the answer to whether something does or does not count as a tax write-off for your specific situation. And the only other note I'd make here is that it is perfectly reasonable to take a loss in your first year or two when doing the job. We get a lot of questions on this. So if your job requires some amount of money to get started, let's say it costs you $10,000, just to set everything up in your art studio or whatever, and you haven't made that money back just yet, that's okay. And you should definitely be reporting deductions in those circumstances. If you do take a loss every year, the IRS does have something called hobby loss rules, but I honestly wouldn't worry about that as long as you're on the up and up and you're reporting everything correctly. I would not worry about audits as long as you're reporting everything that's ordinary and necessary. We almost never see somebody have an audit unless they're really trying to, quote unquote, get away with something. So, yeah, keep track of all this stuff. Ask your tax pro if you're unclear. One note I would make on tax write-offs. I know we did talk a little bit about what a tax write-off is and how it subtracts from your taxable income. Tax write-off is not free, so don't try and. I would encourage you not to try and game the system. Don't go in and think, oh, laptop tax write-off, it's free. It's free. It's free. When you hear tax write-off, what we're talking about is saving some money on taxes. It is not free products that you could buy. So just a heads up on that. Okay, on to our next topic, which is 1099K. So I did mention this briefly. With a 1099K, this is one of the forms that I mentioned. I wanted to include a special slide here because the rules are changing this year. I'm guessing some of you did get this form already, and you're going like, okay, what's this? And it's nothing to worry about. It's not a new tax, but it is a new way for the IRS to keep track of the taxes that you already owed. Basically, in the past, people who were getting this form were the ones who had over $20,000 and 200 separate transactions from a single platform. So if you operated a store on eBay as your full-time job, that would probably be you. But this doesn't capture a bunch of taxpayers who made less than that from a payment platform like eBay. And so in order to make sure everybody's paying what they owe, the IRS has dropped the transaction requirement and the dollar limit. So if you're getting this form for the first time and you're wondering why, that's why. If you get it next year and you're wondering why, that's why. They want to be able to collect taxes on the people who bought and sold Taylor Swift tickets for a huge markup and then never end up reporting it. So for this last year, it was $5,000, and then the limit is going to drop again next year. So nothing to worry about, but did want to give you the heads up on that. Quarterly taxes. So quarterly taxes, what are they? Quarterly taxes, which are also known as estimated taxes by the IRS, are taxes that you pay 4 times a year, although not exactly quarterly, for amounts that you estimate that you're going to owe, right? So with W-2 employee income, remember W-2 income, you've got an employer setting aside taxes for you. When you check every paycheck and you see the amount that's deducted for taxes, that's money that's being taken out and set aside for you for the IRS to take from at the end of the year. But if you are a freelancer, you're a business owner, you don't have an employer, that is technically supposed to be you doing the withholding. And that's true of the IRS, and that's true of most states as well, which have their own estimated tax rules. So you're required to pay quarterly / estimated taxes if you expect to owe $1,000 or more at the end of the tax year. And then I just recommend setting some aside. It depends on how much you make, but if you look at last year's tax burden, let's say you owed $6,000, divide that by 4, $1,500 is what you should be setting aside for each of those dates. If you didn't file estimated quarterly tax payments, and you're like, what the heck? It's January. I just went the whole year without paying any of my quarterly taxes. Am I screwed? You're not screwed. I wouldn't worry too much. Most people don't. You may owe a penalty. The IRS does not always pursue those penalties, but they can. If you want to make sure and you don't want to deal with getting a nasty letter in the mail, pay your quarterly taxes. We can help you pay those. So just ask your tax pro how to pay quarterly taxes. We'll get the process started for you. You can see the dates down below. You'll note that the last one is actually next year before taxes are due. Again, don't fret if this is your first year doing 1099 work. I saw a lot of you that was the case. Don't worry. The fees that are assessed for not paying your quarterly taxes are not enormous. So I wouldn't panic too much, is what I would say. You can also Google Keeper quarterly taxes and start the process that way as well. LLCs. We get a ton of questions about this. So generally, for most people, this is not a tax question. For most of you, the decision to start an LLC or not is not really a question of what you'll be paying in taxes, with a few exceptions. For the most part, this is a legal question. An LLC is used to shield you from personal liability. If somebody turns around and sues you, for example, if you have an LLC, they'll be prevented from pursuing your personal assets, and it'll just be limited to the company's assets. There are ongoing costs, and there are ongoing documents that you need to file with the state if you do choose to go down this route. So that decision is up to you on whether you choose to pursue that or not. It won't affect, for most people, like I say, it won't affect them on their taxes, whether you have an LLC or not. You'll be taxed at the same rate, same self-employment tax that you would have been stuck with had you been a sole proprietor. You can have the same tax write-offs. All that same stuff still applies. It's really just a legal question. However, there is a subset of you who make a lot of money, for whom it does make sense to think about pursuing an S corp. So, what is an S corp? Without overcomplicating for most of you, it's a type of business formation, specifically for your 1099 work, where after having set up an LLC, you essentially make profits as the business, and you pay yourself a salary from those profits as well. So you do have to make enough in order for this to be worth it for you. But once you get into the $70,000, $80,000 or more range is where it can really start to have a significant impact on your savings. And the reason is that on a portion of that income, you are no longer responsible for paying Social Security and Medicare taxes. So without diving too much into this, we can help you file with S Corp taxes. If you're like, I've never heard of this, I make that much money doing my 1099 work. Is this for me? Reach out to us. We'll be happy to discuss that a little bit more with you. And what is Keeper? What Keeper is a tax deduction / tax filing service. It's going to be your all-in-one place to be able to hook up a bank account, let us know a little bit about your own personal tax situation. You remember all of those deductions that we were talking about earlier. It's a lot of stuff to keep track of. download the app. We're going to make a lot of this stuff super simple for you. When you get onto the app, a lot of these deductions are already going to be marked for you as deductions, and you'll see, like you see in this example, with $1,300 added to the refund. So many people, it drives me nuts. So many people don't claim deductions at all on their Schedule C. And if this is you, shame on you. Go claim your deductions. You're leaving a lot of money on the table. Could be thousands of dollars. So, go download Keeper if you like saving money. And then Ask is another major component of our service. You can see in the bottom right there. I've recommended several times chatting with your tax pro. This is the place where you're going to be able to do it on the app. You can also do it on the desktop. They're going to have all the information that you want. We got 24/7 assistance for you to be able to help file your taxes. And then every return that we file is reviewed by an actual tax professional and then sent to the IRS. We have you're not at any risk of an audit if you want to make sure your taxes are filed super accurately and you're saving the most amount of money, and you don't enjoy filing taxes and want it to be made simple for you. This is the place you're going to want to go, is downloading the Keeper app, either, like I say, on desktop or on the app. And now I think we got the Q&A segment. So, okay, don't mind me. I'm going to look through the chat here. I've been ignoring you. All right, let's take a look. Would Keeper as an app be a business deduction when purchased? Absolutely, yes. Keeper itself is a business deduction because it's necessary and it's ordinary and necessary for your business. Let's take a look. All right. If I started a sole proprietorship in November of 24 and I missed the January quarterly payment, can I still pay it now before the next one? No, you cannot. Deadline was January 15th. But if it was just one quarterly payment that you missed, I would strongly suspect that they're not going to, I can't say this for certain, but my guess is that they would not pursue that penalty if it's literally just one quarter that you missed. Am I going to be hunted down? Okay, good. I'm glad I addressed this a little bit during the presentation, but the answer is no. It's a small fee that you're going to have to pay. It's unpleasant to get that note in the mail saying, hey, we noticed you didn't pay your quarterly taxes. You got to pay a little bit more than you were expecting. It's a thing you have to deal with, unfortunately, if you didn't pay your quarterly taxes. They may not choose to pursue it, but they can. Can you claim write-off for dinner with a 1099 contractor and their spouse, given it's a work trip? Yes, absolutely. Yes, you can. What about moving expenses? Moving expenses are not going to be. There was a carve out for like military. If you were stationed somewhere else and you had to move because of that, but by and large, moving expenses are not going to be a tax deductible expense. If it's for W-2 work that you had to move, chat with your employer, see if they'll give you a relocation stipend. I drive 10% for work and had to replace my windshield. Can I write off 10% of that repair? Absolutely, yes. So when we're talking about cars, we're talking about the gas, we're talking about the maintenance, we're talking about car washes are an ordinary and necessary expense. And we're saying, and you could, I guess you could put a little asterisk next to necessary, but if you don't want to drive around your Uber, it's caked in mud or something like that, you can reasonably claim that car washes are a necessary expense for the upkeep of your vehicle, car insurance, that stuff as well. So all that goes into it. All right, let's see. As someone that provides services to clients, does driving to them count as my commute, or can I write that off? Commute is really tricky. This is a really good question. So commute does not count as a tax write-off. It's only the miles that you drove for work. But commute itself only counts as a commute if it's to the same place that you're going every day. If you have a short-term assignment that's like 3 months or less, you're contracting for a particular job, then that does not count as a commute. If it's to specific people, if it's to multiple locations, that does not count to a commute. Those are business miles. And a small note on the auto deductions as well, which is if you're like, I haven't been keeping track of my mileage, we can help estimate that for you. There's basically two ways you can do the the auto expenses. You can do it with the raw dollar amount as far as the money that you put into the car, or you can put in a number of miles. And I believe for this tax year, it's 67 cents a mile that can be written off, something like that. Don't quote me on the exact number, but it's something like 67 cents a mile, and we'll just calculate which one is better for you and go with that method. So we do get a lot of questions like, oh, I didn't keep track of my mileage. Not a problem. I'll help you estimate. Rent and not mortgage. Mortgage as well. I should have clarified. Yes. So when we're talking about the home office, rent and your mortgage payment are both going to be as a percentage able to be written off. So really good question. Jason, good question. Desk, chair, air purifier, office decor, chargers. Yes, and you can add toilet paper to the list as well. So the list truly, this sounds like a loophole or something that we're making up, but these rules are incredibly arcane, and they were set up at a time when we did not have Uber and we did not have Airbnb and we did not have all these different kinds of generating income from sources that are not your regular W-2. So these are not a loophole at all. The only thing that you have to keep in mind, again, I know I sound like a broken record, is ordinary and necessary, and you got to keep track of the business use percent. So if you buy a lamp for your desk, that's going to be a full tax write-off if you're using it exclusively for work, right? 100% of that lamp is being used for your work. If it's the lighting in your room that you're using, then it's only going to be 10%. If it's 10% of your house, it's 10% of your lighting, because that's the amount that you're using for work. So it does get a little tricky. As always, ask your tax pro on Keeper. What is the max percentage that you can deduct from your laptop? All of it. If you use it exclusively for work, it's entirely a tax write-off. Is there a difference between 1099 and sole proprietor? As an income type, the answer is no. I would say those are different terms. 1099 being the form itself, sole proprietor, contractor. There's a lot of different terms for the same thing in the eyes of the IRS, which just means that you're a business owner. I moved to South America and work remotely as a bookkeeper and virtual assistant. I travel back to the States to meet with clients and get new ones. Are my travel and lodging expenses write-offs? Some of them are, but that's a complicated question. And when it comes to international tax, foreign taxation, international taxes, things do get complicated. We can absolutely help you out with those. Send us a note that you're interested in filing and you have some more complicated taxes. We'll help you out. Would the drive to the airport count as a work trip? Yes, the drive to the airport would count as a work trip. For hotel stays that are extended for pleasure, can we just sum the daily rate for the allocable work days, or for the applicable work days? The answer is it's complicated. It depends on how long you were gone, and it depends how long you I think, again, don't quote me on this. It has to be more than 50% for work. If it's under X number of days, I don't have it off the top of my head. Consult your tax pro. But the answer is yes. Should I file my LLC and W-2 taxes together or separate? So that depends. If you're a sole proprietor, you're only responsible for filing your individual income taxes. Your LLC does not actually file a tax return, but you are responsible, depending on the state, for like. So I guess I can't speak. I can't speak to every state. So you may be responsible for filing your LLC taxes separately. I know that there's like in California, for example, there's like a $600 or $800 yearly fee that you have to pay if you have an LLC. So sorry, I can't give you a better answer. It's going to depend on your state. All right, let's see. With meals, oh, this is a really good question. With meals, how far out of town would you need to be to write off food expenses? The answer is travel expenses count outside of your sphere of influence. So I'm in Minneapolis. If I drove over to St. Paul, that does not count as travel, unfortunately, even though I've crossed the Mississippi. It has to be outside of your metro area. So if you are genuinely bona fide outside of your sphere of influence, and that's going to be up to you to determine, is when travel expenses actually count as travel expenses. You can't just book a hotel across town because you don't want to make the drive back. If you buy supplies on Amazon, how do you document the expense? Do I have to go through each one and write what it is? The bad news is yes. The good news is you're saving money every time you do. So that's the answer. Let's take a look. Is that my? Oh, thank you. All right, we'll take one or two more questions and then I think we'll part for the day. Is business coaching and business seminars and travel expenses something that can be written off? Yes. So continuing education is absolutely a business expense. Anything that improves, it could be medical publications, could be a conference where you go to improve your craft, something like that. That is going to be a deduction as well. Can I just screenshot a receipt, or do I need a physical copy? So on documentation, we would encourage you, like all good business owners, you should be keeping track of all of your business expenses. But is the IRS really going to harass you for that pack of peanuts that you bought at 7-Eleven when you were buying your gas? Probably not. I would say keep as good notes as you can. It's really for the big ticket items that are going to be ones where you're really going to have good documentation. So we would encourage over $75 is probably where I would say keep a receipt at least. So if you have a receipt, that's great, especially if it's something that's thousands of dollars, your laptop or something like that, and the IRS wants you to prove that you bought it and used it for work. You'll have that receipt available for you. What kind of grocery expenses can I write off? None. Sorry about that. If they're groceries for you, that's going to be at one point in time there was client entertainment or something like that. I guess there's a little bit of wiggle room there, but now unfortunately not. Groceries are a no-go. Only meal expenses where you're actually doing some interacting with the client are going to count. Thank you for your thanks. It's been a pleasure. Hope you all learned a lot. Go download Keeper, file your taxes, be good taxpayers. If you have any other questions, let us know. You can reach out to support@keepertax.com or reach out to your tax pro if you have tax questions. Good chatting.